Today we are diving into the ever-evolving landscape of the UK rental market. From a surge of landlords selling up to tenant demand to UK rental prices. There's a lot to unpack, so let's dive in and explore the key developments and what they mean for landlords, tenants, and the broader housing market. Stay tuned. At the start of 2025, data from Property Analytics revealed that there was a huge uptick in landlords putting their rental properties on the market for sale. In fact, in January, it was recorded that over 25,000 properties were ex-rental properties. This represented 17%, just over, of properties of listings that were on the market for sale overall were rental properties. This marks a nearly 50% increase compared to the same period in 2024, where only 11.7% of new listings were actually ex-rental properties. And this trend isn't just about listings. In fact, in 2024, there was over 111,000 properties sold from landlords to owner-occupiers, effectively removing these rental properties from the market. Now, what happens is this makes it even more challenging for tenants out there. More competition, obviously less stock, and rental prices increase. And there are several factors contributing to this landlord exodus. I'm not going to go through all of them, but the main ones at least. Mortgage increase. Since 2021 approximately is a huge increase in mortgage interest rates. And this is something combined with the Section 24 that was introduced from 2017 to 2020 by the then Chancellor George Osborne, which effectively means that landlords now have to pay tax not only on their profits, but on the overall income. That combination has been lethal to landlords. The next one is new regulations, the Renters' Rights Bill, especially the abolishment of Section 21, the so-called no-fault eviction. This has a lot of landlords nervous because from their perspective, they now are limited as to how they can get possession of their property back. I'm going to say that isn't a huge challenge, of course, depending where your property is located and the type of tenant that you attract. The other one, of course, is taxation, which kind of ties into that Section 24 implementation, but more so towards buying more property and growing your portfolio with the stamp duty. It was 3% and it's now increased to 5%. And of course, landlords and investors take this into consideration. And for a lot of landlords, they say it doesn't make any sense to them. And Colin Bradshaw, CEO of 20CI, notes that these pressures are promoting many landlords to exit the sector, further tightening rental supply and pushing rents higher. Industry experts observe that while some landlords are selling up, others are restructuring and adapting. So Babik from One Dome highlights that those landlords who have properties in high demand areas like university towns are actually retaining their properties. Not only that, but other landlords are adapting by restructuring and making sure that their properties are in a limited company so they can have a more tax efficient business. However, the situation does vary from region to region. In fact, Ryan Harris from Hampton in Clapham says that there's been a steady stream of rental properties moving from rentals to sales over the course of the last 18 months. And an estate agent in Richmond notes that landlords have been selling consistently for years without sufficient new entrants to replace them. And another agent in North London mentions that many landlords are adopting a wait and see approach, especially with rents at or near record levels. Let's talk about rental prices. The average rent in England for March 2025 was averaging at £1,200 or just over. Now, compared to last year, 2024, we can see that that's increased by 4.6%, where it was just around £1,160. Now, what does this mean for tenants? Well, tenants signing new tenancies today means that they are paying on average £600 more per property year on year. So get this. The South East saw the most significant rental growth by over 6% year on year. This means that in 2024, a property in the South East would be on average around about £1,280. Last month, this had risen to £1,365. This was followed by the West Midlands and the North West, with both regions recording a 5% year on year rent rise. The slowest year on year growth was seen in the East Midlands, coming in under 3%. March marked the third month consecutively of rental price growth. Now, this is showing that the rental market is beginning to warm up after the traditional slowdown of winter, especially when it comes to November, December. February is particularly slow when it comes to rental. So the increase was small, just by 0.3%, increasing rents by just $12.09 to $12.13 in March. Still, that's a contrast to what happened last year in the same period. In fact, there was a slight dip. So that suggests that this time round, well, there's a little bit more energy in the market, a little bit more momentum. And what about void periods? And this is when a property sits empty on the market. Well, there was a slight uptick in March. In fact, it was 21 days in March compared to 20 days in February. Regionally, of course, this is a mixed bag. The Southwest saw voids lengthen by 2 days, and the West Midlands had the biggest change, with voids increasing by 5 days. So, despite headlines about pressures in the rental market, landlords continue to enjoy some solid returns across England and Wales, especially when it comes to the north. This is according to the latest 2025 buy-to-let rental barometer from Fleet Mortgages, which shows rental yields holding up well in most regions. The northeast tops the chart with a yield of 9.2%, followed by the northwest at 8.4%, even though Yorkshire and Humberside dipped slightly from 8.5% to 8.1%. It's still amongst the highest in the country. Fleet says that the northern regions continue to be an attractive option to investors and landlords. It has a good entry point, meaning that house prices are lower and still has decent rental incomes. Looking across England and Wales, rental yields continue to hold their own quarter on quarter at around about 7.4%, but has still grown 0.3% compared to this time last year. That suggests that the rental sector remains resilient despite ongoing challenges like higher interest rates and tightening regulations. And first-time landlords are playing a growing role, especially when it comes to the north. And we can see 16% in the north, and if we look at the northeast just behind it, with 15%. And the East Midlands actually had the highest proportion of new landlords at 19%. In contrast, regions like West Midlands, Southwest and Greater London saw the fewest new landlords applications, with just 10% of applicants entering the market for the first time. And that being said, London was revealed as being the highest growth buy-to-let market in the UK. Simply Business has analysed over 100,000 landlord insurance policies to uncover the hottest UK buy-to-let regions and point to the top investment opportunities for existing or aspiring landlords in 2025. And the data reveals a dramatic reshuffle in the buy-to-let leaderboard. London has bounced back as the buy-to-let capital of the UK, with 13% growth in new buy-to-let landlords between 2023 and 2024, compared to just 4.11% growth the previous year. After stuttering in 2023, London's strong continued tenant demand and the broad array of property types spoiled the market once more last year. So there you have it. Do you sell or do you hold? If you sell, it should be for the right reason, and hopefully this is the right timing for you to cash out. If you're just selling because you're concerned about the renters' rights bill, well, as long as your property is in the right location and attracts the right tenants, that shouldn't be an issue for you. And if you do decide to hold, there are some decent yields to look forward to. And if you do decide to sell and you're looking for a great agent, make sure you follow the link on the description for a good recommendation.